Hello and welcome to Car Dealer Live. I'm James Baggett, founder of Car Dealer magazine, and today on the show we're talking furloughing again, and specifically what can be paid with regards to commission during that time. I know there's lots of questions about this in the motor trade at the moment. We've written a lot about it on Car Dealer magazine website, but today we're going to try and get you some firm answers. So joining me is Mike Jones. He's the chairman of Motor Trade Specialist Accountants ASE Global. Good afternoon, Mark.
Afternoon.
Good afternoon, Mike. And as well as Mike, we've got Nona Balkis, who is a solicitor from Motor Trade Legal Experts, Lawgistics, a bit of a stalwart of these Car Dealer Lives. Good afternoon.
Afternoon, James.
Well, thank you for you both for joining us. We've got lots of topics to get through today. As always, I'll be taking questions from our viewers live. So if you're watching this on YouTube, submit those. They'll be fed through to me. I'll get through them as quickly as I possibly can. I'm not going to put a time limit on today's show either. We aim for 20 minutes, but last time we did one of these, it went on for about 40. But we'll see how we go. But let's get cracking. So firstly, Nona, to you, very well done on the information that you managed to elicit from HMRC via Twitter this morning. Perhaps we can talk a little bit about what they said to you and the confirmation it will give dealers about commission and what they can pay as part of furlough payments.
Okay. Well, of course, originally when the guidance came out on the 26th of March, I think it said no commission at all. And of course, that sparked fear among everybody because they would have been getting probably something alongside minimum wage or less. But there was a lot of lobbying by, I think, Sue Robinson to get commission included. I think Jim Reid and the IMDA also had a petition going, and eventually we heard on Saturday morning, which is an odd date for something to come out, but that shows how fast moving this is and how things are changing all the time, that commission could be included. However, it said compulsory commission. So what does that mean? That isn't an expression. What does compulsory commission mean? And there's been a lot of discussion going on, and this morning I was able to get through to HMRC and say, can you confirm that car dealers can pay commission based on the rules for employees whose pay varies. So that means they can either get 80% of their average earnings over the last 12 months, or the highest, if it's higher, the same salary they got this month last year. So employers are probably going to have to do two calculations and pay whichever is the higher of those. Obviously, the cap of £2,500 still applies to that anyway. And I did actually go back to HMRC and said, that's great, you've clarified that, but what does compulsory commission mean? Does that mean contracted? And they said, yes, it does. So basically, if a car dealer's wages is normally made up of a basic plus commission, you can work out the average over the last 12 months, and they now, it's confirmed, will be able to get that. And hopefully that won't change again. But things are changing all the time, but that is the current position from HMRC, confirmed this very morning. So car dealers can pay their staff commission.
That is going to come as a welcome relief to a number of salespeople. I've had countless messages from salespeople over the last few days who have been told by their dealer bosses that they're still not going to have these commission payments included, which I think, frankly, is disgusting. They should be looking after their staff more than ever right now. Mike, what is your interpretation of these rules? And do you think this clarification that we've had from HMRC this morning is enough for those dealers who have been refusing to include these commission payments going forward to now pay those?
So I think the increasing clarification is really helpful. ASE's position has been all the way through that we would end up with the commissions included, as we do with holiday pay, sick pay, etc. So that's been our standpoint all along. But I can understand the caution from some dealers and dealer groups, because ultimately they're going to have to put the calculation together. They're going to have to claim the money, and ultimately they're going to be audited by HMRC. So they need to be comfortable. And it's only when you dig into their historic commission arrangements as to whether they were based on a pay plan. So we could say it was contractual, even if that was a verbal contract, or whether it was just an extra few quid that they gave to somebody, which ultimately they would have to justify. The majority of the people that in fact, everybody that I've spoken to directly is looking at including commissions and looking at how they treating their staff and trying to support them through this time, because they're going to need them back for a fast start when they come back. We've got an awful lot of March cars that we've still got to deliver. There's a lot of used cars still being sold, and we're going to need to sell those, and we're going to need salespeople to do that. So if we've got a disaffected sales force because we've had them on minimum wage, I think that could be quite dangerous from a point of view of how fast we come out of this once the brakes are taken off.
So, Mike, the test here, as I understand it, is it's the contracted commission. So how is a salesperson contracted? Does that have to be written down in a contract, or as you've just mentioned, verbal? Is that safe enough? And also, does it include commission paid on their car, on the car they sell, and things like paint protection and gap insurance? Can that be included too?
Absolutely. As far as it's part of their their normal pay plan, which in some businesses is really quite straightforward. In some businesses is really quite complicated, involving a number of different hurdles. So, but if we've got this in the past and we've got the history, then we can absolutely include them within the salesperson's earnings. I mean, there were cases a few years ago, and this is all back to the legal terminology as to definitions as to what earnings are. There's been many cases as people have tried to avoid paying maintenance or whatever, where they've tried to reduce their earnings, and there's a set definition as to what comes within earnings. I can totally understand why the government has got into the position it's in, and also why there isn't the clarity there that people are looking for, because this is being made up so fast. As you said, I mean, we were in discussions on Saturday as we tried to work out what this meant and what guidance you could put out there. But in my mind, we absolutely can include all the different things that that form part of a salesperson's overall package.
No. Can I come to you on this? What do you think is the safest way for a dealer working out their payments that they should be paying to their furloughed staff to include commissions? What would your advice to be to them the safest possible way for them to do that?
I think it's follow the guidance, which says you pay them either the higher of their average commission over the last 12 months, or if this month for last year. Of course, because commission probably goes up and down, as Mike just said about the new car. They might have earned a lot April last year, so it looks to us that you can pay perhaps there. But the cap's 2,500 anyway, but I think dealers have got to do the two calculations. This is the average over 12 months. This is what it was this month last year, and pay the higher, but bearing in mind the £2,500 cap. And I just want to say, because we're obviously talking to dealers all the time, and I think a lot of them have wanted to look after their staff, but because the initial guidance was very clear and said no commission, no fees, no bonus, that is where a lot of the confusion. So they've already furloughed some of them employees, and they've got to get back in contact with them and change what they've already told them, I think. So I think I can understand, and obviously they have to make sure there's a business to come back to as well. So there is a balance between, yes, we want to be nice, socially responsible and pay these employers as well, but these business owners have got to make sure there's a business to come back to, so their employees will be there and there'll be a job for everyone, or as many people as they can have. But I can understand that they've been confused, because until Saturday it was no commission whatsoever.
So just before, I'm going to come on to some questions in a moment that we're receiving online, but my question to both of you would be, do you think now we have enough guidance and information that is watertight enough for dealers to make these payments?
A lawyer is never going to say anything is watertight, James. That's just not how we operate. First thing you learn at law school, it depends, is your answer to everything, really. I think at the moment, that is as good as we're going to get. That's the HMRC official channel have said it is fine to pay commission. So, and I think if they go back on that, then it's going to cause all sorts of horrors politically. So I don't think that'll happen. So I think, yeah, you're pretty safe as far as a legal person will tell you it's safe to go.
Mike, same question to you. Can you put a percentage on it?
I can't put a percentage on it, but we've been pretty consistent all the way through, even when the initial guidance came out as to where we thought it was going to end up and where people could confidently go in supporting their staff. We will also be expecting and standing by for the far side when HMRC come out to challenge this. And I think people need to be consistent in their approach. They need to have come up with a rationale for what they're doing. They need to be sensible in what they're doing and be able to justify it. The people that I'm talking to, and I was talking to a couple of brands yesterday as well as the retailers, is that they should be, in my mind, it's included. That's where all the legal precedent has been. That's what we've used from a historic point of view, and they can absolutely go with it. Ultimately, though, it's down to the individual dealer and the individual FD within that business to decide what risk they're going to take. I mean, there are some businesses that I'm aware of that have come to a deal with the salespeople where, if ultimately the cash does get clawed back much further on down the line, then the salesperson will effectively earn that back over time to repay the business, to remove the business risk. But at this particular moment in time, we need to be supporting the people while they are furloughed.
So I'm going to move on very quickly to these questions here that I'm getting online, and I'm sorry I keep delaying them. But Mike, a quick question to you on that point. What would you say to those salespeople who are not being paid what they feel they're due by their dealers? And what can these guys do to question their dealer bosses?
I mean, they need to talk to them, and they need to understand the rationale as to why, and see if they can reach a compromise. I mean, when we get out of all this crisis and further on down the line, I think we're going to see not only the legal position being tested, as in lawyers potentially putting claims together, going, well, you could have claimed this free money, you didn't pay it over, sort of no win, no fee style. But also the court of public opinion will be out there, and people will be looking for businesses that have treated their employees well. I mean, when we get to a situation where even Mike Ashley can be made to climb down with regards to his initial position, then you can see the power that can bring to bear. And in our industry, we're not immune from that in the slightest. So I think there will be that sort of a reckoning further on down the line. One thing we've not touched on yet, we've been talking about the technicalities of the actual furloughing and the calculations, is the timing of payments. And I very much see a challenge on the timing of payments for the April payroll. I think all the retailers need to be talking to their banks and planning for the fact that they won't have the April furlough cash in for the government by the time they make the April payroll. We need to be planning for that now. If they do manage to get everything organised, the portal launched, the payments done for April, sensational, but we just need to be planning for the fact that that might take a little bit longer. And I know, talking to some of the banks, they've been granting or looking to get approval for temporary overdraft extensions secured on the furlough payment when it comes in, as they're looking to support businesses through this.
That's a very good point, Mike, and it is one of my questions I'd like to come on to in a moment, the mechanics of how this works. But I'm just going to turn to the few questions we've got here and see if I can move a few of them. So I'll get that. Nona, firstly, question here from Vince Pemberton. He says that he guesses that the bonus and commissions payable will also be payable to admin staff if they administer a deal. I would suggest that's correct.
Yeah, I think if it's in the contract and they normally get that commission, yeah, that's fine to do. I think. Hi, Vince, by the way.
On a question here from John Priest about bank holidays and how they should be confirmed as part of these payments. Have you got any guidance, either of you, on that?
I don't know if Mike has, but the holiday, there's a debate at the moment whether people can take holiday while they're on furlough, whether they have to be paid in full, whether it's 80%. I don't think that's particularly clear yet at the moment, but I would think most companies are going to be saying nobody's taking any holidays or bank holiday, and we will sort it out further down the line, because holiday can now be carried over for another year at the end of this. Of course, it depends how long it goes on for, how that works practically speaking, but it's still very grey at the moment, unless Mike has anything other.
Yeah, I mean, just looking from a purely practical point of view, within our business and lots of other businesses as well, holidays is going to be a challenge, because we actually need people to take holidays now. The worst thing from the business point of view is the government takes the brakes off, says we can get back to work, and we've got no staff to do any work because they've all booked themselves off on holiday because they are sick of being cooped up for a while, and they want to fly off around the place. And businesses are chatting to employees about how they can best do that, how we can make sure that the business can operate when it needs to and when it's allowed to, so that we can start meeting the customer demand for all the new vehicles, the used cars, and the service work that is building up during this period of lockdown.
So if someone takes holiday during this period, they're paid full 100% of their wages. Is that correct? Even if they're on furlough? Can you take holiday while you're on furlough?
This is the debate that's going on at the moment, and one of the top barristers, Daniel Barnett, is talking a lot about it on his Twitter account at the moment. And it seems to be that you can take holiday at the same time as you're on furlough. But we're waiting for extra guidance, but that possibly is a way to get 100% of your pay for a week or 2 weeks rather than 80%. But as I say, it's still all up for discussion at the moment.
There's a few questions coming in here about what people can do while they're furloughed, which I'm going to firstly start on directors. If everybody in the business, including the director, has been furloughed, what can that director do as part of that business under the current government rules?
Really go there. Well, if we take it from the guidance, furlough directors need to carry out particular duties to fulfil their statutory obligations. So that's filing accounts, and it says they should not do work to generate commercial revenue or provide services to or on behalf of their company. But somebody has to process these furlough payments. So if you were furloughed, your accountant, or you haven't got an accountant, your payroll person, probably the director in a lot of small companies is going to be doing that. Does that count as a service or not? We don't know, but practically speaking, somebody has to process furlough. But directors cannot do anything that generates any revenue. But I would expect that they can probably process payroll, in that it will come under a statutory obligation because they have to pay tax and national insurance, which is a statutory obligation. But again, no actual clarification, but common sense would tell you that is it, but nothing else at all. Very basic stuff, basically.
Mike, would you agree with that? I mean, is this a case of if a dealer has furloughed everybody, including himself as the owner, can he even answer the phone?
You wouldn't have thought so. I mean, to my mind, providing services, if you can subcontract it and pay somebody else to do it, then it's a service. And I think this is going to be a really difficult one. People will ultimately, I'm sure, be gaming the system. People will be claiming for furlough payments whilst also getting people to work. Now, whether that's answering the phones, running a BDC, responding to internet leads or whatever, I would imagine that we don't yet know how HMRC is going to find out and how they're going to audit this as we come down the line. My expectation is that when they do come and audit it, then they will be naming and shaming people who have been abusing the system. And then we're back into that court of public opinion. For me, it's all the way through. It's been the common sense rule. What makes sense? What is sensible? And how you, I mean, it's the age-old thing. How you prove that somebody hasn't been doing something. We don't know. It's a difficult one to prove, but I'm sure they'll have a go, because there's going to be an awful lot of money at stake as we come out to the other side of this.
I mean, my staff are furloughed. I've had to deactivate their email accounts. We've turned off their Slack accounts, and we've spoken to them all and just said, look, we're really sorry. This feels like a draconian measure, but we want to make sure that we're safe on the other side of this. Would you advise that the dealers do the same? Because some dealers I can see from social media are making their staff still work while they're on furlough. I mean, that's technically fraud, surely.
I think that's far too close to the wind from my point of view. They're taking a big risk that if they are doing that, particularly if people are noticeably active on social media whilst also being furloughed. I mean, interesting, we've had a variety of communications in from some of the manufacturers, from some of the brands, talking to us as a supplier, basically saying that James, your normal point of contact is now furloughed. Please do not make any contact with them. They're not going to be responding. We're not going to be speaking to them. So we're seeing them being pretty harsh on that, because obviously there's going to be an awful lot of money at stake, and we don't know yet what the sanctions will be if somebody has been found to be abusing the system, and whether they're going to say, right, we'll have the whole lot back. or whether it's an individual thing. Either way, I think it's a very, very dangerous path to tread.
No, what are your thoughts on that?
Yeah, I'd agree with that. I mean, HMRC, there's a lot of money they're going to be paying out. They've got to get it back somehow. So if it's going to people that have made fraudulent claims, you know, just don't do it. HMRC is a body you don't mess with generally, because they will come after you. And I think, and on that point, just about furloughing, on the guidance on Saturday, also come out to say to be eligible for the grant, employers must confirm in writing to their employee, confirming that they have been furloughed. So that's the sort of evidence they're going to be looking for. So they need to make sure they've got it in writing from all their employees, and that communication is there. That's probably an anti-fraud measure. And it said a record of this communication must be kept for 5 years. So I think HMRC are already thinking about how long they will go and look into people's records. So this suggests they will be investigating furlough payments for the next 5 years. So people need to keep a whole pile of, these are our staff, this is the consent they gave to furlough, this is why we paid them, this is our order book, this is how we show our sales have gone down and we've had to furlough staff. They need to have that whole pile kept for the next 5 years, because HMRC will without doubt come after people.
So there's a question here, well, two questions actually, from Lucy Herman, asking about her service manager who's fielding calls from service customers to advise when they can put them in again when they reopen, and asking whether they can be furloughed, and likewise for their marketing team are updating their website whether they can be furloughed too. Well, I mean, I would assume that yes, they can be furloughed, but they've got to stop doing what those tasks that they're currently doing now. Yeah,
that's all commercial work. They can't do that. You're either doing work and keeping business going, or you're not. Like here, for example, some people are furloughed, some people aren't. Those that are furloughed, you know, our sales team and client care team have gone. Joel, the director, he's doing all of that work. The admin team, 3 are furloughed, 2 are here. They're doing all that work. Nobody can answer their emails that isn't part of the team that is still going. If you're on furlough, no work whatsoever.
Thank you. Mike, can we go back to those points that you made, please, about the portal and the cash flow issues that this is going to present for dealers? Have you got any information on how this portal is going to work, and any idea on a timeline? What are you advising your customers?
With regards to how the portal is going to work, we're going to need our online PAYE reference. So if people don't do that online, they needed to apply, and there was the guidance out there that it could take up to 10 days. So people need to make sure that they are on with that. The government also issued basically what they're going to be asking for. I think in the first instance, it's going to be a pretty high level check, as in this is the company's PAYE reference. Are they claiming for less than they have paid over the course of the last little while? So does it make reasonable sense? There didn't seem to be a huge amount of information that was going to be required at the first instance, but we need as a business to keep the detailed records as to how we calculated it for when they come and do ask the question. When's it going to be active? I don't know. They've just said that they're building a new portal. I'm slightly cynical with regards to the government's ability to build IT platforms at anything like a rapid speed that we can then all make use of. And it was in the news today that the number of people that are being furloughed could be sort of 9-10 million. There's going to be a lot of, this website's going to get an awful lot of traffic really quite quickly once it launches. So as I said earlier on, I think cash flow is my biggest concern at this particular moment in time. If I end up with an argument with HMRC further on down the line about whether the calculation was exactly correct, I'll have that argument still being in the position of being in business. So I think people need to be planning now for the chance that it won't come during April or in time for April's payroll, and we need to be managing our way around that so that we can wait for the government. If it that isn't there at the end in time for April, there will be an absolute massive amount of pressure from the wider economy on how quickly they can get these payments out, because they've very much said furloughing is the way to go. It's the way to protect long-term jobs. Please do this. We're going to pay you this amount of money. It's like, well, that's all well and good, but we've all run out of cash. So there is going to be a huge amount of pressure there. I would just like to have a contingency in place as to, okay, what happens if the payment doesn't arrive before my April payroll?
So with that in mind, should dealers, have you heard from dealers who are going to be holding off paying staff on the normal pay date because of this until they get their cash from the government?
I haven't heard of that as yet. I'm sure people will be having that discussions, and that was one of the, I mean, that was the as I understand it, the Weatherspoons line that got them into trouble at the start was, right, fine, we'll lay you all off and then we'll furlough you, but we aren't going to pay you until we get the money from the government, and we've got no idea when that's going to be. In the first instance, the people that I've been working with over the course of the last week, it's been, no, let's put our plans together, our cash flows and forecasts together to go to the bank and say to them, look, can we have some temporary support for this period of time? This is the calculation of the furlough amount of money that we're going to be asking for. These are the people, this is the communication. So we built our case and then asked the bank for support, because most of the government's support in terms of loans, etc., is coming through the normal banking network. So keeping that communication line live, I think, is very healthy for all businesses to do at the moment.
Mike, I'm going to come back to you in a moment and talk to you about the grants that are available to dealers, but I'm just going to move to Nona just for a second about employees who have left the business after February the 28th that are requesting to come back. I mean, I saw one dealer who has to be applauded. He's taken back 10 staff who have left since February 28th and put them on furlough, which is purely a cost to his business and the government, but it's going to help those people out. What's the process for these dealers? Should they take these people back? Is it a decision for them? And on the other side, what about the employees who have left? Can they insist they're taken back?
This is a quite controversial issue, but if you made somebody redundant, then you should possibly consider taking them back, because if you're saying you've made them redundant because you couldn't afford to pay them and you could have got furlough from the government, there could be employment tribunal claims further down the line. But if these people have left and started a new job or not started a new job, we would still be saying don't take them back. It would be nice to do that. But let's say this lockdown goes on for 6 months, you re-recruit somebody, bearing in mind that everybody's employees are entitled to 5.6 weeks holiday a year. At the end of that 6 months, you're going to have to pay them 14 days holiday and possibly their notice period again. So it could cost the business if they're taking people back on. And of course, most people only pick up employment rights after they've been there 2 years. So some people who've been there sort of 18, 19 months might not have rights to certain things, but if you keep them on, they could do. That sounds quite harsh, but again, businesses have got to look after themselves and make sure they've got a business to come back to so they can employ some people. So I think we would say if you've made people redundant because you couldn't afford to pay their wages, probably relook at that. But if people have left, we don't recommend taking people back on because there are too many employment implications that nobody is talking about, certainly from the government. So we don't know what's going on with that. So it could be pretty costly to a business there. But those people can go off and claim universal credit. And I know that's a very difficult process and it's not as much money because the DWP have got an enormous amount of applications coming in for universal credit. It's the same as the bank with loans. The Alison Rose from RBS was on the TV last night and they're saying, why can't businesses access these loans? And she said our call centre normally gets 3,000 calls a day. It's now getting 25,000 calls a day. So it is difficult for everybody. And you have to feel for employees that were not on the payroll at the 28th of February. But I think employers are putting themselves in a slightly sticky position if they start taking people on that resigned. Redundancy, think about it. Resignations, personally, I wouldn't go there.
Okay, thank you for clearing that up. Mike, I'm going to come to you with a question here from Joanna Fife. She's asking about HMRC's time to pay service for PAYE and NIC. Can they use that at this time? And is interest added to that amount if they don't pay on time? And are there any penalties? So slightly different topic, but I was wondering whether you could answer that question for us.
Yeah, I mean, the government's advertised that people can use time to pay, and very much a lot of business. You know, they said with regards to VAT that we weren't paying it for this quarter, albeit you needed to cancel your direct debit. For PAYE national insurance, then people have been looking for time to pay. Getting through to speak to somebody at HMRC is a challenge with regards to organising this. So a lot of clients have been using the sort of email service and just emailing in that they were looking for time to pay. With regards to penalties, as long as we've informed them, we should be okay. Interest, there will ultimately be interest payable on this, but we need to agree a time to pay with them once we've agreed what the amount is and what period of time is. I mean, historically, the government's interest rates are relatively low, given the fact that the Bank of England base rate is basically zero at this particular moment in time. It's not penal, and a lot of people have been using that as a way of getting through the crisis, with us then being able to repay it over a manageable period of time later. It's going to take a long time for them to go through all the potential time to pay arrangements, and the government is going to be under big pressure to reach sensible commercial arrangements with people to help them get out of this, because there's no point them opening the doors and saying that we can come out of lockdown and then HMRC asking for all the money the next day, which then puts all the businesses back into trouble that they've basically helped get through the crisis.
So your advice would be to contact HMRC and ask for some time to pay those PAYE payments. The difficulty there surely is going to be getting through. I mean, I know my accounts team really struggled when it came to this. You can't just cancel the payment, can you? You have to have an agreement.
You don't have to have an agreement, but you need to have told them that you want one, and that you've really and that you've really tried to get through, and that you've made your best. You've made best efforts really in order to be able to do it, and then you can do it. But again, if we're arguing about penalties in 6, 9, 12 months' time with HMRC and the method of communication at this particular moment in time, for a lot of businesses, that they take that. The penalties aren't monstrous, particularly as long as we've got a sensible position. And we have tried to contact them. I mean, the same way as we were talking about the bank's call centres being understaffed. I know that the government said they'd put extra people on from HMRC, but they're still coping with huge call volumes at this particular moment in time. And as long as we've been reasonable, then I'd be happy to have that argument with them at when we come out of this as to what exactly else did you expect us to do.
Question here from Mark, and it's one that's come up many times, is do you think HMRC are going to change their styles on directors' wages, which when they're being paid via dividend? I mean, most small companies, bosses will pay themselves via dividend. They've been told for years and years by their accountants that this is the most sensible way and tax efficient way of doing things. However, now they're massively penalised because they can't get any help. Mark's point is that's going to be very detrimental to his employees because they might not have a job to come back to going forwards. Do you think they're going to change their mind on this, Mike?
It's a proper 50-50 call. I mean, when they announced the initial guidance for we had stuff for employees, but nothing for the self-employed. So then there was a big campaign on effectively to get some support for the self-employed. That came out there. There's now a campaign ongoing to try and get something for people who have paid themselves minimum wage effectively and dividends. It's less politically important for them to do that because there is a counter argument that, okay, you were minimizing your tax liabilities in the past by going this way. Now you have to deal with your employment status and what comes out of that. So, I mean, I'm hopeful that we'll get something and that they will support the business owners as well as who've been paid through dividends, as well as the employed and the self-employed. But they're sort of making the rules upon the hoof, and it needs to be a significant sort of campaign that then gets them to widen the scope to also include people paid through dividends. Yeah, it's less obvious than the hole that we had with the self-employed, where there was an absolutely massive part of the economy that was missing out on the support.
No. What are your thoughts on that? Do you think there's going to be a U-turn on this policy?
I think I probably agree with that. I think we said last week on here, didn't we, that we could see that the rules for commission could change, and they did. But I can't see that changing because of the point Mike made there. People have taken the tax efficient option, and I understand businesses pay tax many other ways in terms of the director's salary. I just can't see HMRC. It'd be too complicated, I think, apart from anything else. But it is difficult. But then they've got to make the best of these other loans and grants and everything else that's on offer that I assume Mike's gonna talk about.
Thank you very much. That's a perfect introduction to my next question for you, Mike. Can we have a chat about those grants that are currently available to dealers and the ones that you think are worth investigating at this time for most businesses?
I mean, the first, well, the most obvious thing that is worth investigating is the rates relief. Most of the dealerships are too big to actually get a rebate, but we shouldn't be paying rates for the businesses that do fall under the rateable values. Then the government is supposed to contact people, but I've heard plenty of instances where the local council has said, well, you need to fill in this form and email in, so people need to be in contact with the council and trying to get that rebate, that grant that they're entitled to. People need to make sure that they've cancelled direct debits and stuff on rates, because in the nicest possible way, I would remove the ability for them to take the money rather than just assume that they're going to stop taking it in every instance, as we did with the VAT. As far as the loans are concerned, the initial loan scheme, the coronavirus business interruption loans, missed out the vast majority of the retail motor sector being for turnovers less than 45 million. So that was what was announced with the 300 billion of support. We had that, and then we had the ability for people to do effectively sell commercial paper to the Bank of England under the corporate finance facility, which is only really applicable to the biggest of players. And it was interesting yesterday that we saw that Inchcape announced that they were looking to investigate whether they could do it. Now, if a business as large as Inchcape are owned and listed on the stock exchange and has been for a long time, if they're only just investigating whether it works for them, for the vast majority of the sector, between a turnover of 45 million and into the billions, there was a big gap. Now, there was another loan scheme, the larger business interruption loan scheme, introduced for turnovers up to 500 million, again missing out a big chunk of our retailers. The loan schemes have all had problems, which the banks have been blamed for, but to be fair to them, the government set them up in the first place, saying that you need to try and get a commercial loan under normal means, and then if you can't get one, you can have a business interruption loan under normal means. People were being asked for relatively healthy and high interest rates and personal guarantees. The government's then jumped up and down and said you shouldn't be asking for personal guarantees, and so that's been sort of moved aside from the £250,000 loans and under, and also people are now going straight into the business interruption loans for the smaller businesses. For the medium-sized businesses, so this sort of 45 to 500, the guidance still says that the bank has to follow the normal procedures and try and put them in, their normal credit checks, and that will take time. And my problem with all of this is the time that it takes. And we saw, if we go back to the last crisis and the EFG loans, the Enterprise Finance Guarantee loans, in the end, an absolute fraction of what the government announced could be lent was actually lent. And that's my fear with this. It's fine, Rishi Sunak standing up there and going, there's hundreds of billions on offer for this, but we need to be able to actually get at the cash, and we need to be able to get at the cash before the businesses run out and have to close the door. So I'd imagine we're going to continue to see a loosening of the purse strings. I know a number of the banks that I've been speaking to have streamlined their credit decision process to give more decision making at a lower level for things that are straightforward, operating on the principle that if a business was viable and we would have lent to them beforehand, then we will continue to lend to them now. Basically, very, very few businesses are actually viable at this particular moment in time. So they're taking a practical and commercial approach on that, but I still worry that the cash is going to take too long to arrive.
Have you had any clients who have been successful in this, or who are pursuing it?
I've got clients that are pursuing it. I've had nobody that's actually had the cash yet, but that's on a relatively small sample size. Albeit they've come out and said, the stats are getting updated every day, but the amount that they've actually lent is tiny at this particular moment in time.
Thank you, Mike. There's talk of some grants from the council for these smaller businesses, these £10,000 grants. I think I saw a note from Lawgistics going around that then there's a possible scam around this. What can you tell me about that?
Yeah, I think we had somebody had an email, I think, that looked like it was from their local council asking for their details, but it turned out it wasn't. It was a scam. But I think, unfortunately, that is just the nature of where we are today in the world, where there's a system, where there's money, there's a scam. So whether it comes through as a text on your phone, HMRC want to give you a tax refund, that there are going to be scams. I think we've only seen one instance of that so far, but they're bound to be out there. But businesses, they've got to be particularly diligent now, because obviously they'd be quite keen to take advantage of these grants. So it's just keep that little red flag in your head, as you probably would normally, to look out, because there will be scams.
From what I've seen on the Car Dealer Magazine forum, there's quite a few dealers who have actually had these payments come through from the council, and it comes directly from straight back into their bank accounts. They have to apply for it online, but I know of a number who've had the £10,000. So I take it it's a case of contact your local authorities, rates department, make sure they're aware that you're a small business, and ask them for the money. Yeah,
I know up here, I think Peterborough have already sent all theirs out. I'm not quite sure Huntingdon are quite up with it yet, but I've seen businesses up here saying, yes, we've got our £10,000 now. So I think the councils are actually been quite quick on this, and perhaps a bit quicker than the banks, because obviously it's a smaller pocket of people they're dealing with.
Another question on the rent side of things. How does it work with regards to security of tenure? Asked one of our readers, for businesses withholding rent during the lockdown period, and when these businesses are back in action, when are they going to be reasonably expected to pay the arrears, and will landlords be allowed to charge interest? Unpick that one if you can.
Yeah, well, the important point is people can't be evicted or any other action taken against them for a 3-month period. At the moment, that might be extended, depend on what happens. But really, you should be talking to your landlord. But yes, you will. So it's not a rent holiday, it's a rental payment holiday. So you don't necessarily have to pay your rent for those 3 months. But of course, if you can afford it, if you're in a fortunate position that you can, certainly pay it. But if you can't, talk to your landlord. Will they charge interest? Depends what's in the contracts. There's probably something already in the contract for late payments, I would suggest, in most cases. So they need to look at that. But yeah, I think some people are confused that think they don't have to pay rent at all for that 3 months. It's a rental payment holiday, so that you have to pay it at some point.
Mike, I'm just going to come to you as we reach the end of our chat. But have you got a single piece of advice that you think is most important for dealers right now to do?
From an operational point of view, I mean, we're putting out operational guidance on a daily basis through the sort of LinkedIn channels that we've got and on Twitter, because there are still some operational things that we can do. I mean, we've seen from our experience from our offices in China and in mainland Europe that the customers are still interacting and do still want to interact. And so people need to make sure that the business development centres are still active and are dealing with customers, because we're going to want a fast start when we come out of this. We've got a variety of things, new car sales we need to catch up. Used usually moves first. The service department, as long as we've got the parts, we'll want that to be rocking and rolling. So it's making sure we're still chatting to customers on a daily basis or a weekly basis. We're finding out how they are and also lining them up and getting those bookings in, so that the business is seen to be proactive and therefore customers at the moment, so that we then get the benefit as we come out the other side. And I know that Robert Forrester's putting out on a daily basis the number of customer interactions they've got and the number of cars that they're selling, and that's brilliant to see, and that reflects what we see overseas, where we're now in China. A lot of people are looking for delivery rather than going into the showroom, but that tends to be the first thing that we can do as an industry, and then we can start generating some revenue to get us back on track.
No, what about from you? Have you got a piece of advice right now that dealers can take away from this?
Probably just to make sure that you can justify your decision. Don't be panicked into making decisions. Be aware that the guidance is changing all the time. It's very difficult for us to keep up with, and we're looking at it every day. So just be sure you can justify your decisions, because you don't want HMRC coming after you in 2, 3, 4, 5 years' time and picking up a hefty penalty.
Thank you. Well, a huge thank you to yourself, Nona, and to you, Mike, for your time today. It's been absolutely fantastic. I mean, we're 45 minutes in, and we've still got a few questions coming in, but I think we should probably leave it there, let you two have a rest. If I have missed your questions, you feel free to send them to me. I'm on james@blackpoolmedia.co.uk. You can find me on Twitter @CarDealerEd, or on LinkedIn. Send me the messages. Any questions you've got, we'll look at all of them, and I will endeavour to get you an answer. Tomorrow, I'll be talking to consumer data experts from TLA. Anton Hanley and his team will be talking about some really interesting insight they've got into actually what buyers do want at this time and how you can interact with them. And then on Tuesday after Easter, I'll be chatting to Ford of Britain's Chairman and Managing Director, Andy Barrett. If you've got any questions for him, then send them via those communication methods I've just mentioned, and I'll put them to him on Tuesday. I've published a full updated schedule for Car Dealer Live. It's on our website, but check back every weekday at midday on cardealermagazine.co.uk for our next live broadcast, which leaves me to say thank you very much once again to Mike and Nona, and I'll see you all tomorrow. Thank you very much. Goodbye.